Welcome to another episode of the Build and Scale Boldly podcast. I am so excited to have Diana Miret joining us today. She is a fractional CFO. I've worked with her, and a lot of my deepest friends actually work with her as a CFO. And I really wanted to bring her in because I think finances are so important for all of you to really have mastery of, to be following your numbers. I think it really helps you stay out of trouble as a business owner and also make much better decisions. And so we're going to be really diving deep into what you need to know as an entrepreneur with your financials and hearing about from her on all her experience she has working with entrepreneurs. So a little bit on her background. Diana is a fractional CFO who helps entrepreneurs and physicians build profitable, financially clear businesses. And actually, I want to add in their real estate investors too.
That's right. That's right.
That's how I initially met her. She's a former corporate project executive turned numbers obsessed guide. She blends financial strategy, operations, and stewardship to create simple systems that drive profit and peace. And she's also run 11 marathons. Holy cow, I did not know that about you. And loves coffee almost as much as spreadsheets. And that's very similar to me. So welcome, Diana, to the Build and Scale Boldly podcast.
Thank you for inviting me. This is such a treat and such an honor. Thank you.
So can you tell everyone a little bit about how you got started as a CFO? Because I know a lot of people have a lot of fear about numbers and you clearly do not. So how did you get started and why do you think this is such important work?
So I'm the accidental CFO kind of thing. My corporate career of 35 years was based in financial services. I have a degree in accounting and finance, but I'd really gone into project management. I was an executive project manager, program manager, mostly in the financial services area. And I helped large institutions, brokerages, banks, etc., do, financial system stuff and integrations and things like that. It was, big projects, big programs. And it was amazing. And then I burned out and retired at age 55, fully funded. And I said, hey, you know what? I'm just going to relax and paddleboard and move to Florida because that's what everyone does. So I moved to Florida, and about 4 years in, I was bored out of my mind. I missed business. I loved business. I would sit at Starbucks just to see people go by with laptops. I mean, I just was missing it so badly. But at the same time, I didn't want to go back into a corporate environment where I had a boss. So I said, let me see what I can do on my own. And as I ventured into the entrepreneurial space myself, and I got clients for business coaching, I found that the numbers piece just really activated them. And they were mostly bumping around in closets with not knowing which end was up. And I'm like, really? You don't know this and you don't understand that? And I found that interesting and intriguing, but I also saw an opportunity. So I said, okay, hold on. I do know numbers and they've been an integral part of my career. So I can do that. And then someone mentioned to me that, oh, you know what you're doing? You're doing fractional CFO work. And I go, what are you talking about? Oh, yes, that's what you're doing. And so then I began to study it and learn it and framework it and so on until now. That's 100% what I do. And I adore it. I adore it.
Yeah, that's so awesome. And you're absolutely right. A lot of people don't know the numbers of their business, understandably, because they weren't trained in it, right? And a lot of people are accidental entrepreneurs. They had a great idea. They started a business, but they don't know how to run the finances. They don't know how to predict and make decisions based on the past financials and like I just said, predict the future and make better decisions because of it. So talk to people who maybe have never heard about what a fractional CFO does, about what do you do on a daily basis and what are the most important things that people really need to be paying attention to monthly in their businesses to make sure that they're really knowing their numbers and being able to make the right decisions from their numbers.
That's awesome. That's a great question. So your fractional CFO should be a member of your finance team. You should have a bookkeeping function. And that person's job is to categorize all your expenses in the right places and put them in the right spots so that you can make some sense of your numbers, right? So the bookkeeping is always a backward facing kind of role. What happened last month, last year, et cetera. Then there's your CPA, and that person generally meets with the owner a couple times a year, and it's mostly geared around the tax return. So
Mhm.
you've got help with the tax return, which is great, and compliance is very important. Then you've got your bookkeeper who's interested in just where do you want me to categorize this thing and put it there. But the owner doesn't have anyone to give them what Keith calls optics. They have no one to say, well, what does it mean? What does it mean? What do my numbers say about my business? So that's the role of the fractional CFO. And the fractional CFO should spend 80 to 90% of their time looking forward. Like, yes, we use the numbers from the past, we glean intelligence and wisdom from them, but we use that wisdom to forecast into the future. What does that mean? When such and such a thing is happening in our seasonals or whatever kind of revenue or expenses go up and down. You need to understand that so that you can forecast and predict what is going on. So that's the primary role of the fractional CFO, forward facing, member of your financial team, not your whole team, just a member of it. But they are definitely a C level. They are called a fractional CFO because they are meant to be an advisor and someone who is with you in the trenches. They're not just someone, filling out spreadsheets. They are someone who's going to help the business owner make strategic decisions. So what kind of strategic decisions? So on an average day, I spend maybe 10 minutes, 15 minutes reviewing the past with my founder, my business owner, my CEO. Okay, this is what happened in November. This is what happened last year in November. This is the trend that we seem to be seeing in all these different areas that are important to the business. So we're seeing this trend. We're seeing that ratio get a little bit out of whack. For example, marketing, my goodness, we've gone from spending 20% of our revenue to marketing to 40. So what's going on, right? So those kind of questions. And then after we dissect that and understand what took place, we then say, okay, how does that affect our future? And so we then turn it around and together we look at the next 90 days in big detail. Like, I'd love to have a year-long forecast, but the truth is 90 days is as good a crystal ball as any of us are going to have, if that. So we try to have a very detailed view of the next 90 days, and that's always a rolling 90 days. So every month we update that and update that and update that. So we have clarity for 90 days, maybe a little more guessing in the later 90 days, but in the initial 90 days, we want clarity. So what does this mean? Oh, do you want to hire that person? Okay, well, let's see what impact that's going to have on the next 90 days and beyond. Oh, you want to buy that piece of equipment and you want to go into debt for it or pay it out of cash. What can we do? What's the impact on the business? So those are there's usually 3 general questions that I get. I can almost tell you any CFO client that comes along, here they come. First one, I have made all this profit and I don't know where my cash is. That's my first question I get most of the time. The second one is, I don't know when I can hire X role. I have no idea. I think I can do it here, but I don't know for sure. And the third one is, how much should I be paying myself? Mm-hmm. So those are easily answered when you have a clear 90-day view with a further extension. But if you have a clear 90 days, you can afford to hire or you can't afford to hire. It's super simple, clear decision making.
Mm-hmm.
Is that?
No, that's so helpful. And I think also I want people who maybe aren't in the position to hire a fractional CFO yet. I want to just say that, people do have full-time CFOs. Those are much larger businesses. Oftentimes they're, have loans and debt and all these, and maybe they're raising. Those are when you have a full-time CFO. Fractional CFOs, I think, are really great for smaller businesses when you have employees and you're, bringing in good revenues. I don't know if there's a cutoff, like, is it multi 6 figures? Is it 7 figures? I don't know. I'd be curious to know from you. But then there are the businesses that are smaller, 6-figure businesses, maybe a couple 100,000 in revenue a year, and maybe can't afford a fractional CFO yet. When you're an owner of a smaller business like that, and you're not in the position that you're ready for a fractional CFO, what do you need to be doing of these pieces? Because you really need to be doing a lot of it yourself.
That's a
So can
great
you talk about
question.
that? Yeah.
So let me answer the first part of your question.
Yeah.
Generally, the sweet spot I find is any business that's nearing the $10 million on up usually is ready for their own full-time staff, including bookkeeping. You want to get out of the fractional space once you're
Mhm.
nearing the 10 million. And some
Mhm.
people can make it to 15, some people need it at 8, but in general it's 10. So once you're at 10, you need your own team in-house available to you at all times. Below that, there's things you can do. So I'll start with the little person who's really under maybe 250 a year kind of thing. They're just into the six figures and understanding. So the first thing they should do is sit down at a minimum with your bookkeeper every month and go through every number. Make sure you make that bookkeeper explain stuff to you and say, oh, look, our marketing spend was this. Oh, what was it last month? I always ask three questions. What was it this month? What was it last month? What was it last year? Same time. At a minimum, those three little angles tell you something. You can reach some sort of conclusion and say, well, we spent less than last month, but double what I did last year. Okay, well, why? Answer the question, why? So if you have to do it yourself, go through your numbers with someone, make sure that you understand what they're saying, and ask yourself this month versus last year. Because every number, really, numbers are only valid when you compare them. If I
Right.
said I did a
Relation.
100,000 last year, you're like, that's great. Or is it not good? Well, that depends. Did I
Mhm.
make a million the year before? Then that 100,000 isn't very good. But if I did 30,000 last year, that 100,000 is great. So it really has to be in comparison.
Mhm.
So, but if you can find a CFO, fractional CFO, I offer that service, but some don't, and I respect my colleagues that don't want to offer it. I will offer a package of hours. I don't do by the hour, but I will offer a package of hours that you can just pay for, like say 5 hours or 10 hours as often as you want, and then sit down with someone and say, okay, just a couple of hours of your time. What does this look like? What do you have to say? And so on. And then it's not a commitment on the budget as heavily. So if you can find someone who will do that, that's also something you should do if you are in your low six figures.
Yeah, that's a really good idea to at least have somebody having that oversight. And I want to reiterate what you said. It's really about numbers, trends, and relationships, right?
Yes.
Because without seeing that, you really don't know if a number is good or bad, and you don't know which direction it's going. If you
Right.
have trends over the last 12 months, you have a sense of what's going on. It tells you a story. If you have a single number in a moment of time, you do not know what if it's good or bad. And
Exactly.
so, we're huge Keith Cunningham fans. You've already mentioned Keith Cunningham
Yes.
once, and
Love him.
so, yeah. I mean, I love the way that he when I went through his training, he really had me create dashboards that had multiple years worth of data so that I could see trends even over multiple years. And it's just so infrequent that people think to do it that way. They don't think to build dashboards outside of QuickBooks, and
Right.
to be able to get optics. So can you talk to everyone about the need for optics versus just looking at your QuickBooks and that's enough?
Right. Okay. Well, QuickBooks has a lot of powerful reporting capabilities. And if you can spend the time to find them, yay. But most business owners don't want to become QuickBooks experts. And frankly, who wants to, right? Unless you want to make that a career. So the best way to do it is to take these important numbers out of QuickBooks and then put them into a dashboard that makes sense to you. And that way you then have intimacy with your numbers. I know that maybe sounds like a weird word to use, but I do believe you
I
need
love it.
intimacy with your numbers.
Mhm.
You need to know. When I'm talking with a client and we're looking at things and we're strategizing, and all of a sudden they go, "Oh, what's that $400 in advertising?" I'm like, "Okay, let's not." You can be intimate. We're now being strategic. Okay. You can go back to intimacy with your bookkeeper. With me, we're going to stay strategic. What does that mean to our future and to our past? And I think the rest of your question is by creating a dashboard that makes sense to you, then you fill it in yourself, then you have a closer intimacy with how these numbers relate to each other. I create dashboards for my clients. Of course I do. But I always start with the basic 5 or 6 that everyone needs to see and look at. And then what number makes the most sense to you that you want to track? And sometimes they don't know. And that's okay. I'll suggest a number or two. And they, oh yeah, that's a good idea. So we track that. And then they're able to see their numbers moving along this other metric too, and how they work together. It's really kind of, they love it once they understand what we're doing.
Let's talk a little bit about Yaya. What we call Yaya
Oh,
really
yes.
comes from Keith Cunningham. And so these are the business expenses that maybe when you go to sell your business, the next person wouldn't have it. It's executive training that you do, maybe the travel that you do, that really is business related, but not necessary for the business to survive. So tell us a little bit about Yaya and how you kind of advise your clients to separate it out so they have a sense of what's going on.
Yes, thank you. Yeah, so the thing is, in order to really work with an owner, a founder, or a CEO and understand their operation, I have to remove the expenses that aren't related to the true operation, right? If we're going to look at a gross margin or a net margin and it's got all these other things swimming around in it, it's mucky. It's not clean. It's not tight. But if we remove these things, like you mentioned, the yayas, professional development that another business owner with the same business would not necessarily do. Travel, the other owner would not do. I see other things
Right.
like
Wife is employee of the month and gets a lot of jewelry. I
exactly.
know that
Oh,
happens too.
you've met people like I have.
I
Okay.
have.
So when some of them are paying for apartments for their
Oh,
kids.
I know. And some people put in all new windows in their house, in the primary home, and want to write it off as a business expense because they have their home office in it. I know.
Right, exactly. So those things, what I do is in the bottom of a profit and loss statement, after you get to your net operating income, there are 2 more categories: other income and other expenses. So other expenses, I try to put all these yayas in the other expense category so that they are not messing with the true profit and loss of a business. It's still there. When the accountant is doing their tax return, if they want to put it back up into the category, they can do so very quickly. But at least from a management perspective and an operational expensive, we pull it out and we put it
Yeah.
at the bottom.
Right, because you don't know how your business is doing year to year. You can't follow those trends very well. If all of a sudden one year, you sign up for $100,000 mastermind and you didn't have that the year before, it looks like your business isn't doing as well. Your profit margin drops, but you have to separate out the yaya to be able to have those metrics. Now,
right.
one of the things we were talking about earlier that I think is important to talk about is mindset in finances, because a lot of people may think we're just talking about the numbers here, but numbers are so intimately tied to people's emotions, to people's how they feel about how they're doing as a business owner, and so there's a lot of emotion and a lot of mindset work that can go into finances. So what kind of things have you seen that are helpful to people to remember as they're working through their finances mindset wise?
Yeah. And this is where I think a fractional CFO can actually be very helpful, because they're not married to your numbers. They're not passing judgment. They're just there to help you understand and report. And so it's helpful to have a third party who has no interest. This is what it looks like to me. This is what I see the trend happening. And then they can help you get past that mindset issue. But what I do find is very intelligent people, people that are really smart, somehow think that numbers are too hard. And I'm like, wow, you are brilliant in your career. You're brilliant in the business that you do. You had to go to school for eons to learn what you're doing, or maybe not, but yet this is hard. No, all you need is to apply yourself for a short period of time, and you can capture it. And they sometimes say they don't have time, and I can tell that it's not a time issue. It's more of a, I don't like feeling like I don't know something. People don't
Mm.
like to feel like they don't know. And I often encounter that when I'm doing a CFO type meeting where they don't want to look dumb. And I don't think they're dumb at all. I'm just sitting there showing them certain things, but they may feel like, well, I should have known that. Or why did I do that? Or why didn't I know that?
Mm.
Let's put that aside. It doesn't matter. Let's move forward. What does it mean? And so on. I find, we were talking earlier that I thought that maybe it was the older generations like myself, who, were raised in a more of a male dominated kind of workplace and so on, that where we used to defer financial things to our dads or to our husbands because of our generation. And what I'm surprised to find is I am finding this among younger people too. I am finding not that they defer to their dad or to their husband, they still feel inadequate dealing with numbers. And I thought it was about a patriarchy, but it isn't really. It's a I have to say, I think it's a reluctance to just say, I don't know that. I don't
Mm.
understand it. And I feel dumb, and I shouldn't feel dumb, but I do feel dumb. And so I just don't want to look at it until I understand it. But they don't apply the 1%. So you talk a lot in your podcast about making the time, making the margin to have time to read and study and learn. I mean, you just posted your top business books, etc. You have to make the time to understand numbers. And Keith's book, How to Run a Insanely Successful, Profitable Business, is one of the best books to really make it simple and easy, and you don't feel dumb, and you feel like you can grasp it. So there's no reason for people to feel that way, but we all feel what we do.
Yeah,
Kind of
that's
love up
such
on
a
them.
Oh, no, no, totally true. And I remember first starting out and seeing Keith speak at a Tony Robbins event and saying, "Oh my gosh, I knew none of this stuff." And it doesn't feel good when you're learning something new. It's normal to feel uncomfortable. Growth comes from discomfort, right? And
Right.
so you're going to have a period of being uncomfortable. I mean, I went through that too with the numbers. I didn't know what I was doing, and I persisted, right? And then at a
Correct.
certain point, you start to understand it, and then you get a lot of certainty from it because it's not just fear in your brain of like, I don't know what's really going on. It feels like chaos. It feels like there's so much unknown, but you can sit down and you can look at the numbers and you can have some level of certainty. So then it becomes a place where you actually go to get that level of being able to relax and say, okay, I actually can see what's going on, right? And so it's a shift that happens over time, but there is some uncomfortableness in the beginning. But if you keep persisting through, you'll get to the point where knowing your numbers makes you feel so much better than not knowing your numbers. You just don't know that you're there yet, in the
Yes.
very beginning. You don't know that's even possible. And Keith is such an incredible resource for people. But all this is learnable. And I think the first thing is getting over the limiting belief of I'm not good at finances, or I'm not good at numbers, or I'm not good at doing dashboards or spreadsheets, or whatever it is, the limiting belief. And you can certainly tell yourself, right? I love numbers and numbers loves me. That's a chant that we always do in Tony Robbins world before Keith gets on. It's just like to try to get us
I
excited
love
about
that.
numbers.
I
But
love numbers. My numbers love me. I
right,
love
I
that.
love spreadsheets and spreadsheets love me. I love dashboards and dashboards love me. But I think as a business owner, if you really want to have the impact in the world, you have to take care of your financial health of your business, period.
Mhm.
And this is the way you do that. It's not one of those skills that's negotiable. You must learn it. And there are many things in business when you do a startup that you're not going to enjoy doing, but you're going to do it because it's necessary for the business.
That's right.
And this is one of those things. Maybe you have fear, maybe you have discomfort, maybe you don't want to do it, but you got to do it. Period. There's nothing
Well,
more to say about it.
if you don't manage your numbers are going to manage you. You've probably heard
Yeah.
that before. Nothing worse than being managed by your numbers, because by then it's generally too late. It's not always too late, But if you don't manage them, they'll come manage you, and you won't probably like it. And I don't want to be fear-based, but it's true.
Yes. And if you're in a situation as a business owner and you're feeling that right now, please do not feel shame. I want to say that that is a normal thing that happens to a
Yes.
lot of business owners because a lot of people don't manage their numbers. I have been in rooms with people who run, like 9-figure businesses and they don't know their numbers. It's
Oh boy.
scary. It's scary. I'm sure you've seen many of those
Yes,
types of
I have.
situations and and they don't even know where they are. It's wild to believe that 9-figure businesses are run that way, but I've seen it.
Yeah.
And so understand if master this, and you master this when you're a 7-figure business or even a multi 6-figure business, it makes all the difference for you in your journey. And you won't be in the situation when your business grows that everything's chaos. Nobody has any clarity. Maybe you owe a ton to the IRS because nobody's been really managing the numbers. Your business goes bankrupt, because you made poor financial decisions because you didn't have the numbers. And I've seen that happen. So again,
Me
Diana and I are
too.
going to reinforce this is such a vital lesson for all of you to learn early, right? So you don't crash into a wall.
Listen, an additional zero is no different. You can be managing 5 figures is the same as managing 6 figures, is the same as managing 7 figures. It's just an additional zero. The repercussions are the same.
Yeah.
It doesn't matter that it's 6 or 7 or 8, you have to know them so that actually I've been experimenting a lot. Instead of being more reactive, I've been working with my founders to be, I call them tripwires. I don't know what else to call them, but I'm like, let's look at what point did we know that November was not going to be a good month?
Mm.
Let's not find out on December 10th that November wasn't a good month. So at what point, what indicator in the middle of October, maybe, or end of October or beginning of, what indicator, again, those are called leading indicators. You and I both know that, but what is that tripwire that says, oh, wait a sec, hold up. If I haven't got X number of sales by the 3rd week of whatever, I'm not going to be able to cover my costs. So to know that tripwire, to know that, let me not go, oh, wait, I didn't cover my costs this month. No, you knew that if you would have looked at certain numbers 3 weeks ago, 4 weeks ago, or 6 weeks ago, depending on the cycle of your product or service, right? You could have known your leads were down 6 weeks ago.
Right.
Right.
And a lot of those numbers aren't necessarily financial numbers. The
Right.
finances just reflect it. So you have to know what leads to the sale, right? Is it number of emails you need to collect? Is it number of sales team calls that need to be done? And so it goes beyond that. And that's why it's so helpful to, not just have your bookkeeper, because they're not going to understand that piece. That's actually a piece that a CFO level individual would have. Or you, if you have a small business, you got to know this stuff too. Keith calls them critical drivers. What are the important things that have to happen in order for you to result in the finances you want? What are the critical drivers for those financial results?
And when to look at those drivers, like to look at them in the rear view is educational.
Yeah.
We need to look at them ahead of time and see at what point did we know, or we could have known and didn't pivot or didn't try option B or whatever. Yeah.
And it's not an issue if you have dashboards for your critical drivers that you're looking at every single week, because you're going to, or even every single day, because you're going to figure that stuff out real quick, because you're going to see the trend and you'll be able to adjust, which will give you the financial results that you want. So again, taking it back to dashboards, back to tracking the important numbers in your business, not just the financial ones, but the critical drivers that lead to the financial results.
That's right.
It's a skill set we all need. And so you and I were also talking about, and I want to make sure we hit this, is, I've seen a lot of people who have a lot of guilt about paying themselves from the business, like taking
Mm.
a lot of money out of the business. They don't want their employees to see, oh, I got this much profit, and they feel guilty about it. But then you were saying, oh, I've seen so many people who draw out of the business and use it like a piggy bank. And I remember Keith used to say, don't be a little piggy, right? He used to say, mama eats last, baby eats first, and baby is your business. So tell us some of the patterns that you see that get people into trouble with the finances of their businesses.
Yeah. So unfortunately, the profit and loss lies to you about your cash.
Yeah.
So some business owners look at their P&L and say, well, I made 100,000 in profit last month. And they go and think there's 100,000 more in the bank account. I mean, they may look at the bank account, maybe not. And they write themselves a check because, hey, I have $100,000 worth of profit. So I'm going to pay myself. I didn't pay myself last month. I'm going to take this big hunk and check out. Okay. So the P&L is a little misleading, and it gives them a false sense of a false sense of security of how much money they really have. P&L, profit, does not equal cash in bank. You know that because you study this. But I have 7, 8-figure business owners who don't know that. I just had that call about 3 weeks ago from someone. I was shocked. They said, my CPA said that I should have more money in the bank than I do. I'm like, okay. So there's things that don't travel on the profit and loss that do come out of your bank account. So for example, loan payments. Only the interest comes out of your P&L. The rest of the loan payment does not. So if you're making a $500 payment and 50 of it is interest, the other 450 is coming out of the bank. It's not showing up on your P&L. So you think you have all that money, but you're actually $450 less in your account. So that's one thing that doesn't travel through there. Mostly it's loans and distributions. So distributions don't show up unless you pay yourself a W-2 salary, and we won't get technical, but distributions to the owner don't show up on the P&L. So if you did take money out, that's not reflected on the P&L. The P&L can say you have all this money when the bank says, no, you took out your distribution. So I find that owners, by looking only at the P&L, or the worst thing is called bank balance accounting, where they only look at their bank. This is what the whole profit first concept, but they look only at the bank account and say, oh, there's all this money in there. Well, 10 minutes after you sign off and you transferred money to a separate account for yourself, payroll just ran and you forgot about that, or insurance just ran, and or something. You don't know the ins and outs of what's in that bank account unless you're sitting there looking at the register line by line and going, this is in and this. Anyway, long amount explanation. But people who look at the cash balance on their bank statement will make a mistake. So what happens? They see more in there than they think, so they pay themselves this big chunk. One of the indicators that I work with very strongly with my owners is, what are 3 months of expenses for you? And every business is different. Every business is different. So if 100,000 is what you spend per month, we call that our burn rate. So if you're burning through about 100,000 every month, 3 months of that is 300,000. All right. In my view, if you don't have 300,000 in a bank account at all times, you are running some risk that if you take any of it out, that you might impact your future cash. So what I find is they don't mean to, but they starve the business and feed the owner. So then they say, well, I didn't pay myself, so you know what? I'll just run all these personal expenses through the business. That's where we get back to the yayas. And then, then we have this nightmare of the bank doesn't equal the profit and loss. The yayas are muddled up inside their P&L and no one has clarity. And then the owner says, well, I need this amount of money. And back to our future forecasting, that's what the CFO is there to do. How much do you want and how much do you need? Let's figure those two numbers out, the want and the need number. That's the one I usually start with. what do you need to sustain your family and to, live? And then what do you want? Okay, great. Now let's see what the business can sustain. We forecast that out as long as we can, 12, 18, 24 months. And if the business can sustain the want number, Bob's your uncle, because we've done all the math. But if the business can't sustain it, then don't do it. We have to figure out how the business can sustain your need number, and hopefully it'll sustain your want number. So I find that business owners don't know enough about the financial statements and the bank and how they all interrelate with one another to do a clear view of what they can take out of the business. So they end up piggying themselves.
Absolutely. So then kind of wrapping it up, can you talk about any resources you would suggest if you're a new business owner, maybe you're making multiple six figures at this point, that you really can use to learn more about the finances of a business and how to build your skill set here?
Yeah. Well, we've mentioned Keith's book.
It's a really great book. It's called Blueprint for a Insanely Successful Business or something like that. Keith Cunningham. Incredible. It's on my book.
It is even my textbook. And I'm a fractional CFO, been doing this for years, right? It's my textbook. I keep going back to the basics. Every year I reread Keith's book. Okay. So if I have to reread it, you definitely are going to need to reread it. So not you personally. I mean, people who are running.
No, I need to personally reread it. I literally have it on my pile on my desk to reread. So
it's right behind me. I know the camera doesn't show it, but it's right behind me. Always available. Okay. So that is one very valuable resource. Honestly, you don't know what you don't know. Your CFO might know. So I'm not trying to plug here for hiring people, but if you were having trouble you're a physician, if you're having trouble with your throat, would you go to a foot doctor? No, you'd go to a throat doctor and say, look, I'm having okay. So go to someone who specializes and have them set up the basic infrastructure or tell you, this is your basic infrastructure. Start here and learn this really, really well. And that'll, circumvent a whole lot of, should I take an accounting class? Should I take that finance course? What about that mastermind? Just go in and get a small scope that you can deal with from someone who can understand you. So that's the main resource I would use because the learning curve can be significant. You circumvent that learning curve by going to an expert and saying, what do I need to know? Tell me the 5 things I need to know, or the 10. Just give me the 10. What are the 10 things I need to know? Set me up a dashboard.
Right.
And can I come
the most important piece? Set me up a dashboard.
I come see you in a couple of months?
Yeah.
At a minimum, I would do that because I don't know what I don't know.
Yeah. And make sure you're on accrual accounting, right, as well, so that you really do have those metrics. And so you got to make sure you have a good bookkeeper who understands how to do that. Also, I've watched a lot of people try to switch from cash accounting to accrual accounting and have all kinds of drama around that. So set it up correctly from the very beginning.
Yes.
Yeah. Okay. Well, thank you so much, Diana, for all that. Can you tell people how they can get a hold of you and find out more about what you do?
Oh, it's been a pleasure. I've been geeking out on your materials for so long. I love your work. It's an honor to be here. So, if you want to know a little bit more about me, I'm on LinkedIn, Diana Miret on LinkedIn. That's where I play. I'm not on Instagram or any of the other ones. And then my website, dianamiret.com. You can find me there, send me an email from there or whatever. That's the best way to get a hold of me. I will be launching a group program in the new year called Within the Margins, because I really believe I'm kind of trademarking the term marginology. I'm trying.
I really like that.
Within the Margins.
That's a cool title. I like it.
Isn't that great?
Yeah.
Thank you. So I have a whole newsletter on LinkedIn called Within the Margins, but I use that to create this group program and it's directed for the smaller business owner who can't really afford a CFO full time to be looking at their stuff, so that they can learn to be their own CFO a little bit and get some basic skills from a CFO so that they can go out and do their own thing. So to get on my email list so I can let you know when that opens up, that would be great.
Oh, that's so cool. That is really cool. I love that. Yeah. Because again, we've both seen so much pain come of people not understanding their finances. And the more that people can, get mastery in this area, set themselves up, there's so many challenges you have in business, so many environmental changes, customer changes, legal changes. Like this should not be one of those things that ends up hurting your business, right? It's one of those things that you can absolutely learn and take care of, and then you can really spend your time on adjusting to all the challenges that randomly show up as a
Right?
business owner, right?
Yes,
um,
absolutely.
yeah, thank you, Diana.
Oh,
Always a
my
pleasure to
pleasure.
have you and to interact with you and to see what you're doing for business
Thank
owners.
you.
Thank you.